It's just the world saying, hey, get me out of the end. The game's over. It's too soon to say that, but I wouldn't rule that out.
Renowned financial expert Jim Rickards has dropped a shocking suggestion that could boost your investments. In a world hungry for massive growth, Jim unveils an asset that could potentially surge 30 times its value, paving your way to millionaire status. It's not about just hearing the suggestion, but also how it will change your life forever. In this video, I'm discussing this asset, sharing insights to guide your investment choices this year. Jim Rickards is a modern financial genius whose advice has helped many people cross the complex terrain of finance and economics. He's not just a theorist, he's been in the trenches, advising governments and making predictions that often hit the bullseye. You might have heard of his best-selling books like Currency Wars and The New Case for Gold. These aren't just books, they're treasure troves of practical knowledge. Consider a broader perspective on these insights. Recall the 2008 financial crisis, a moment that took many by surprise. However, what's crucial to grasp is the power of analysis hidden in real-world data. These insights are not mere guesswork. They are shaped by data.
The classic Keynesian multiplier is I borrow a dollar, I spend a dollar, and I get $1.50 of GDP. And that can look like a good deal in the aggregate. But there comes a time when you borrow a dollar, spend a dollar, and you only get 80 cents of GDP. You don't even get your dollar back, and then 70 cents and 50 cents and so on. And in that world, your debt is going up by a dollar, but your GDP is going up by less than a dollar.
If someone discusses the potential of a significant financial crisis, it's not based on speculation, but backed by concrete evidence and an understanding of historical trends, market patterns, and economic indicators. This kind of foresight can greatly impact your financial decisions. When we talk about uncovering the secrets of an asset with 30 times its potential value, gaining an understanding of the intricate world of finance becomes essential first. It's not about one individual. It's about the power of informed analysis that can guide your financial choices effectively. Understanding the current investment landscape. There is a treasure trove of potential that lies within certain assets. The world of investments has seen its fair share of twists and turns, and it's essential to grasp the current scenario. We're living in a time where traditional investment options like stocks and bonds aren't the only players on the field. Global economies are more connected than ever, with technological advancements and geopolitical shifts shaping the rules of the game. But things aren't always easy. In the world of investing, volatility has become a frequent companion. Market concerns and swift changes in economic dynamics have sparked a search for assets that can weather the storm. Both seasoned and new investors are searching for investments that can produce returns higher than the typical single-digit returns. Alternatives that may not have been thought of 10 years ago are now gaining attention as a result of the demand for high-growth possibilities. Some assets stand out against this background more than others. Physical gold is one such asset with the most value now. Its worth extends beyond the pages of history. It is an actual, enduring treasure that has piqued people's interest for millennia.
Because most people in this country have not a clue that gold and silver are wealth and have been wealth through 2 world wars, German hyperinflation, the Great Depression, every pandemic, and everything the world has ever thrown at it. Over the last 18 months, the central banks bought more gold than any time in history. Why?
Uncovering the asset with 30 times potential. Jim Rickards clearly spotlighted gold, saying that its potential will surge 30 times over. When he speaks, the financial world listens. His foresight has led him to spotlight gold as an asset with remarkable potential. To understand this prediction, we must delve into the factors that give gold its power. You know that gold has retained its value throughout history through economic upheavals, wars, and crises. Its ability to weather storms and emerge stronger than ever showcases its inherent resilience. Its rarity plays a pivotal role in its allure. Unlike paper currencies that can be printed at will, the limited supply of gold ensures its value remains steady, even when economies waver. Jim Rickards' prediction of its 30 times potential rise isn't mere speculation. It's rooted in a deep understanding of market dynamics. The historical patterns of gold appreciating during times of economic uncertainty makes a case for its potential to surge to new heights. In Jim's words, gold is a reliable store of value during times of crisis. Its historical track record and scarcity make it a potential winner in today's unpredictable economic landscape. To highlight its potential, let's take a historical example. In the aftermath of the 2008 financial crisis, gold experienced a significant surge. This is what was already foreseen by Jim. Jim talks about the key drivers of asset growth. You see, Jim Rickards isn't just a financial expert. He's a storyteller of economics that even a newbie could understand. When he delves into the realm of asset growth, he's like a detective, piecing together a puzzle that transforms financial jargon into relatable tales. He breaks down the complexity and points us to the core drivers that make an asset soar. Consider this example: a mix of economic factors, geopolitical shifts, and even a sprinkle of psychology. It's like baking a cake. You need the right ingredients, precise measurements, and some magic to make it rise. The simple mantra that Jim shares isn't confined to one individual. It's a universal truth that understanding these interconnected factors can open doors to asset growth. However, the real kicker lies in practicing patience. The key to success is not just following advice, but having the discipline to wait for your investments to bear fruit.
This has happened many times before, and it's going to happen again, as it always has. And those who are prepared and knowledgeable will do well and survive. Some people came out of the 30s very rich. Not me. I didn't come out of the 30s very rich, but some people did. So if you're prepared, you'll do fine.
You have to keep a track record of spotting trends before they hit the headlines. And that's not just luck. It's the result of connecting the dots others might miss. So, when Jim Rickards talks about the key drivers of asset growth, he's not just giving us numbers. He's painting a vivid picture of how the financial world works and passing on his wisdom like a grandparent sharing life lessons. Simple, yet invaluable. Case studies and success stories. Example of real-life scenario. Imagine it's 2008. The global financial crisis is wreaking havoc. While stocks are plummeting, something shiny is on the rise: gold. Investors who had parked their trust in gold didn't just weather the storm, they sailed through it. Why? Because gold often behaves like a safety net when markets go haywire. Fast forward to 2020, when the pandemic strikes. Again, while uncertainty spreads like wildfire, gold gleams. It's like a reassuring friend in times of trouble. In the mid-2000s, a financial expert named Peter Schiff stood out for his bold prediction about the U.S. housing market collapse and its potential impact on the economy. While many scoffed at his warnings, Schiff's foresight earned him credibility. But his story doesn't end there. Schiff didn't just predict the housing crisis, he also advocated for investing in gold as a hedge against the impending economic turmoil. As the financial crisis unfolded in 2008, Schiff's investment advice proved to be a game changer for his clients. Those who followed his lead and diversified into gold saw their portfolios weather the storm and thrive.
There's actually no ceiling on the price of gold because there's no floor on the dollar. I mean, if we have hyperinflation, the worst case scenario, it won't matter how many dollars you have. You can have trillions and you won't be able to buy an ounce of gold. Now, I don't expect that. Hyperinflation is not my base case scenario. It's just an extreme worst case scenario. But I do expect the dollar to lose a considerable percentage of its value relative to gold, way more than 50%. I would say on the magnitude of 70 to 90% of the dollar's purchasing power is going to be lost. So if the dollar were to lose 90% of its purchasing power, the price of gold would go up tenfold, which would put it at 20,000, right?
Gold's value surged during this period of uncertainty, safeguarding the wealth of those who had heeded Schiff's advice. One notable example is Schiff's own investment firm, Euro-Pacific Capital. By allocating a significant portion of his clients' portfolios to gold, Schiff managed to protect their investments and generate substantial returns. This success story illustrates how a well-informed decision to invest in gold can pay off in times of crisis and as a long-term strategy for preserving and growing wealth. Peter Schiff's case demonstrates that understanding the potential of gold as an asset and acting on that insight can lead to remarkable financial outcomes. It's a testament to the power of informed investment decisions and gold's role in diversifying and fortifying a portfolio against economic uncertainty. These real-life tales aren't coincidences. They're instances where gold's value surged in the face of turmoil, proving its worth. Another name we all know is Warren Buffett, the investing wizard. In 1997, he decided to make a big move. He purchased a staggering amount of silver through his company, Berkshire Hathaway. Now, you might wonder, why silver? Well, precious metals like silver often walk hand in hand with gold. They share similar properties that make them shine in tough times. Fast forward to 2006, and Warren's silver investment had more than tripled in value. A small stone into a sparkling gem. This success story tells us that even the most legendary investors see the potential in these precious metals. Viewer takeaways and action steps. Now, let's sum up the golden nuggets of wisdom we have uncovered. Jim Rickards has helped us with the world of investments, highlighting the potential of an asset that has stood the test of time, physical gold. From understanding the shifting investment landscape to delving into gold's 30 times potential, we have witnessed the remarkable blend of history, economics, and expert insights that set the stage for transformative growth. Key takeaways for the journey ahead. Resilience through time. Gold's historical resilience is a testament to its enduring value, making it a reliable store of wealth even in tumultuous times. Global significance.
Here's an article from Forbes. Why gold is a good investment right now may be set for a new record price. Gold prices are approaching their all-time high, with a 10% increase this year, driven by investors seeking a safe haven asset amid economic uncertainty. UBS predicts gold could surpass its record price, setting a target of $2,200 per ounce by next March, citing factors such as weakening U.S. dollar, banking sector stress, debt ceiling concerns, easing interest rate expectations, and the likelihood of a recession. Gold's price surge is primarily influenced by macro variables rather than supply and demand fundamentals. UBS analyst Cleve Ruckert notes that gold's price is driven by factors like U.S. real estate and the strength of the U.S. dollar. The surge in gold price is unique as it is unrelated to its case.
Its universal recognition and limited supply position gold as a hedge against global economic uncertainties. Jim Rickards' vision. Expert analysis, such as that of Jim Rickards, provides the lens through which we can understand and leverage gold's potential. Economic storms. Gold's value often shines brightest when traditional investments falter, making it a valuable diversification tool. Past predictions. Historical instances like the 2008 financial crisis underscore gold's ability to appreciate when economies face challenges. Actionable steps to take. Educate yourself. Before diving in, understand the nuances of investing in physical gold. Read, research, and seek expert advice. Diversification. While gold offers stability, don't put all your eggs in one basket. Blend it with other investments to create a balanced portfolio. Long-term view. Like Jim Rickards, focus on the big picture. Gold's potential isn't a quick fix, it's a long-term strategy. Timing matters. While gold is timeless, entry points can impact your returns. Study market trends and seize opportunities. Trustworthy sources. Consider established dealers and investment platforms when purchasing physical gold to ensure authenticity. Patience and prudence. Success doesn't happen overnight. Let your investment grow and mature over time. In the realm of investing, knowledge is your most potent asset. Armed with insights from Jim Rickards and the historical strength of gold, you're poised to make informed decisions that could redefine your financial future. As you collect this knowledge, remember that wealth creation is a marathon, not a sprint. Stay patient, stay informed, and stay the course. And just imagine, in the not-so-distant future, you might find yourself thanking this moment for the riches it helped you uncover. I hope you find this video useful, so don't forget to like it and also subscribe to my channel. If you want to hear what other financial advisors say, here is another video for you.